Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, and I'm going to be giving you a bit of an update as to what sort of the main developments have been this week, how markets have responded, and a quick recap on the important sort of upcoming macro events that we have for the remainder of the week. So I want to start here by looking at currency markets. I've got the dollar index, 1 day candlesticks here, and you can see, if I sort of zoom in a little bit, we started off the week on Monday on the back foot. Okay, we fell back to that 105 area. We fell below this previous area of support that I was talking about a couple of weeks ago. Now, this weakness at the time was due to falling US bond yields, particularly at the long end of the curve, amid a further paring back of Fed tightening bets, because on Monday we had US ISM manufacturing PMI data that was actually, the headline was a little bit stronger than expected, but it still fell to its lowest in, I think, slightly more than 2 years. But the most important development in the ISM manufacturing PMI survey was this sharp decline that we saw in the prices paid sub-index, much bigger decline than expected. And the prices paid sub-index, of course, is sort of a gauge of the inflation faced by these manufacturers. So obviously when you see that happening, you get people talking about the fact, oh, US inflation must have peaked, all this kind of stuff, which reduces pressure on the Fed to be so hawkish with their interest rate hikes, and that's pretty much why we saw the dollar coming under pressure. However, things changed on Tuesday because you had two big things happen. Okay, the first one was, geopolitics have been a big talking point this week, and US House Speaker, the third most prominent US politician, I think she's second in line to replace Joe Biden after the vice president Kamala Harris. She visited Taiwan despite the stern warnings from China not to, basically, because obviously China claims Taiwan to be its own and sees US visits as sort of emboldening separatists, as China calls them, in Taiwan. So there were concerns about US-China military, potentially military, but more so economic tensions. So that underpinned the dollar, which tends to be quite a good safe haven when you're talking about geopolitical concerns. But the other thing, probably more importantly, was you had a bunch of Fed speakers come out and basically sound a little bit hawkish, pretty much. They came out and they pretty much, one of them particularly, who's usually quite dovish, Mary Daly, sort of pushed back against she pushed back against current market pricing for rate cuts in the first half of next year. She said, I think, if I quote, she called the market pricing puzzling. And then you basically had the other two and Mary Daly all talking about how the Fed remains really committed to doing the interest rate hikes that are required to bring inflation down, and inflation's still well above target and all this kind of stuff. And it was sort of perceived as a bit of a pushback against this repricing of Fed expectations that have been happening in the market recently. We've had US bond yields falling, and money markets predicting that the Fed's basically not going to be so hawkish because because the economy is weakening and people are betting on a recession, and because people are expecting inflation to come down. So yeah, that hawkish Fed commentary was another reason why the dollar sort of rebounded. And now we're stabilising. Okay, we're stabilising ahead of the release of US ISM services PMI, which is actually more important than the manufacturing PMI, because obviously the service sector is a bigger portion of the US economy. That's today, Wednesday, and then you've obviously got the jobs data on Friday. Okay, so that's the roller coaster that we've been on so far. We can just have a look at some of the other pairs, like euro-dollar. Euro-dollar just about pipped highs for a couple of weeks, neared 103, but has since fallen back. I mean, technicians continue to eye this area of resistance here. Obviously, you have that downtrend as well that I've been talking about for quite some time. So, if euro-dollar does continue to rally a little bit, you have got a pretty significant area of resistance up here around 103.50. There. And the data and all the indications coming out of Europe this week remain ugly. Okay, I think we had what was it, German ZEW data coming out this week, and yeah, not good, not good. Electricity prices are going through the roof. In the industrial sector in the Eurozone is suffering badly and is probably going to have to reduce production. So a Eurozone recession, if it's not already in a recession, it's very likely it will be in a recession, which kind of is deterring people from buying the euro. Let's have a look at sterling. Got the Bank of England tomorrow. Bank of England are expected, by most people anyway, to do a 50 basis point rate hike, which would be the biggest one that they've done yet since they kicked off their hiking cycle last November. Obviously, if they disappoint and do a smaller rate hike, that could pressure the pound. But equally, some people talking about the fact that if their economic forecasts, because they're releasing another quarterly set of them tomorrow as well, if those are even worse than the already very ugly forecasts they gave at their last meeting, that could also pressure the pound. Because, okay, maybe they do deliver a 50 basis point hike, but if their economic outlook is that bad, how many more big hikes are they going to do? So that's just something to watch. Potentially, cable could fall back and test this long-term trend line, depending on how things go from the dollar end. And the last currency pair that I want to show you is dollar yen, because this has been really moving as a function of US bond yields, which have been rising in the last couple of days, or since Tuesday, since the hawkish Fed. Okay, so that's why we've seen. So we saw all this downside in US bond yields as people were pricing a more dovish Fed. Now we've had some pushback from the Fed saying don't get overly excited about it. We're still going to hike because inflation's high. And now we're seeing a bit of a comeback. So yeah, things are pretty choppy, and it seems that that break below this support area here was a fake out, not a breakout. So I'd still be keeping an eye on this area going forwards. Right, stocks. Let's give you an update. Not really much to talk about, to be honest. Bit of chop with all the themes that I've been talking about. Geopolitics, slightly more hawkish sounding Fed, but the stock markets, you can see before the open, the S&P 500 is up just over 0.5% today, so they're obviously taking a slightly more optimistic view. On what? That's the question you need to ask, because they're not taking a more optimistic view on the economy, because the data so far this week has been bad. We also had, by the way, US jobs opening data for June on Tuesday, and that was, it showed a much bigger drop in job openings than expected, which of course isn't a good sign, but it depends. Like, it isn't a good sign for the economy, but if you're hoping that inflation in the US is going to start cooling soon, you want to see some softening of the labour market. So, you've got the weak jolts, you've got the weak ISM manufacturing PMI. It seems as though expectations for a weak economy that will deter the Fed from being too aggressive are boosting stocks. Maybe the bond markets are disagreeing with that. Sometimes you do see a bit of a divergence between these two markets. But anyway, this is the range that we're in at the moment, 4,080 to sort of 4,140. And if, the way stocks are behaving at the moment, if the US data for the rest of the week is bad, shows a cooling economy, weakening growth, points towards inflation that's going to be lower in the next couple of quarters, well then there's every possibility that you could continue to see upside. Because the other thing I should say is earnings, by and large, continue to be pretty good, with most companies beating analyst expectations. Finally, oil. Let's have a quick look. Choppy, like all these other asset classes, still in this downtrend, arguably. I mean, it's sort of chopping through it now. Maybe it's time to abandon this trend line, to be fair. But let me just quickly stick on the 200-day moving average. Because that continues to provide support. Or at least we're chopping around it. Okay, So we haven't had this decisive move. We did have a close below it on Monday, but we haven't had this decisive move below the 200-day moving average. We've just had OPEC, by the way, OPEC plus nations meeting today, talking about doing only a 100,000 barrel per day increase in production in September. But the thing is with OPEC, it's not that OPEC's irrelevant. It's not. You need to watch it. But there's not that much spare capacity amongst the OPEC producers. So they haven't been living up to their actions on output hikes in the last year and a half, because most of their members haven't been able to lift output quickly enough. So it's at the point now where it's like, what's the point in them even saying that they're going to do big further output hikes when they're probably not going to be able to deliver on it? I mean, the thing that could really kill oil is if Saudi Arabia said, because they do have spare capacity, a couple of $1 million barrels per day that they could do. They're one of the only ones with spare capacity. If they suddenly came out and said that, they're going to start smashing the oil production, then that would kill oil. But the thing is, like I've been saying, we've had this downtrend. Okay, we're sort of chopping through it because we've hit a key area of support. But global macro conditions continue to worsen all over the globe, and I still maintain the view that we're going to go below this area of support at some point. And, well, we're not going to go down to 80, but we could go down to about 85 and test these highs here from October, November last year. But yeah, that's pretty much the video, guys. NFP data on Friday, Bank of England meeting on Thursday. Those are sort of your main risk events for the rest of the week. Let's just see if I've missed anything. Pretty sure I haven't. Okay, yeah, Canadian jobs data as well for the loony traders. And I mean, that's pretty much it. Yeah. Hope you enjoyed the video, guys, and I will see you all in the next one.